Hey, good morning, everyone. Welcome to Midwest Market Solutions Insider Commentaries on Friday morning, September the 1st. It is a new month here, and we are seeing higher grain prices. Now, we've been talking about higher grain prices starting to turn around here right around between August 30th and the 1st of September is when we thought the lows would be in place. And so far, so good. Looks like corn fell to new lows in the morning hours of the 31st and then rallied into the end of the day, and we are higher again overnight, building on that strength. We did see a little bit of selling overnight as producers increased some old crop sales, but we are turning higher here again. The dollar's lower this morning after the non-farm payrolls report came out a little bit weaker than expected, and of course, a weaker dollar should be positive for our markets that are going to slowly shift in corn and beans anyway from supply-driven markets to demand. Wheat's already in that phase. That's why we fall into contract lows, as we just don't have enough demand for wheat, and a lower dollar will help that out as well. Okay, so where do we go from here? Well, we think the lows have been in place here in corn and soybeans now. We've been expecting markets to bottom and then start to rally, so this is not a good place to be making sales. If you've got old crop to sell, I know you're probably in a time crunch here. We've recommended to liquidate all of our old crop inventories a long time ago, so we didn't run into the supply issue. Still don't think there's a bull market coming in the next several months, but a slow, gradual build is very likely. Basis levels, I think, will improve, and those will give us some marketing opportunities as we go through the winter months. So FC Stone out yesterday. They are looking at soybean yields very similar to what the USDA said. 49.8, I believe, is where they're at. USDA is at 49.4, so very similar numbers. Their soybean number was up a little bit from last month. The corn number is also up from last month. They were at 162.9, kind of on the low side of estimates. They've raised that to around 166.2. That's still below the USDA number, but I do think the USDA is going to come down in September in their corn number from that 169.5 range closer to where FC Stone is likely at. I think we are actually 165, 166. And that's why we recommended to store this crop through the winter months. If you're going to store a crop, I think corn is the obvious choice right now. Just because you're going to see good basis improvement. You're going to see a smaller crop than what is expected, and soybeans, you're going to have a lot of competition out there in the world from South America. And you want to see what storing a crop and having a worldwide competition can do to prices. Look at wheat. You know, that's got a market where we're trying to compete with Russia and the Ukraine and other countries, and we're at contract lows. Front months went below $4. That's not a market that you really want to store either. So we're going to be looking to continue to liquidate any long positions on rallies, including inventories if you're a producer. Now, livestock trade very choppy yesterday because it was end of the month some position. I think you're going to see more action like that today. We'll have more information at our website, our daily newsletters that go out to our clients. We hope you have a great day and sign up to receive your newsletters directly in your email box. Brian Hoops from Midwest Markets. Have a great day, everyone, and we'll talk to you soon.